Hello and welcome back to my YouTube channel. In today's video, we're going to learn about IAS 16, Property, Plant and Equipment, Compensation for Insurance Recovery. This is so for companies that have insured their asset class or property, plant and equipment against some loss event. And when this loss event occurs, these companies get compensated for the loss that has incurred based on the premium they've paid over time on the property insured. All right. For some companies' balance sheets in the asset section, there is one number that usually stands out, which is the property, plant and equipment, and some people may call it PPE or PP&E for short. Property, plant and equipment comprises of tangible assets held by an entity for use in the production or supply of goods or services, for rental to others, or for administrative purposes that are expected to be used for more than one period. All right. So we have various PPE asset class. The first one we have is land and building, leasehold improvement, furniture, fittings and equipment, computer equipment, motor vehicles, aircraft, right of use assets on buildings, and for work in progress. Property, plants and equipment also includes bearer plants, that is plants that are A, used in the production or supply of agricultural produce, B, are expected to bear produce for more than one period and have a remote likelihood of being sold as agricultural produce except for scrapped sales. So bearer plants are not in scope of this video. Alright, so we're covering the basics around property, plants and equipment and how your company can claim for compensation when a loss event has happened. So we have this asset which your company has bought into, a motor vehicle, and we want to calculate depreciation on it using the straight line method. So under the straight line method of depreciation is measured so that the amount each year is the same. That is, it is calculated using the current gross amount of the asset, that is the cost or revalued amount, the expected residual value, and its useful life. So these are the key parameters that are being used to calculate the straight line depreciation. So we have the motor vehicle at cost 1.5 million euros. Purchase date for this motor vehicle was on the 1st of April 2022. Then useful life in months is 48 months or 4 years. Then the depreciation rate is 25%. The year end for your entity is 31st of December 2022. So from the date of purchase till the year end, the motor vehicle will have been depreciated for 9 months. So let's see how this works in practice before we go further to see where a loss event has occurred, how you can claim compensation, and the accounting entries for the reinsurance recovery. All right. So in terms of depreciation or the asset itself, which is a motor vehicle, so for the PP measurement, this will be measured at historical costs. And at initial recognition of the PP on the purchase date, we're going to pass the following entries. You need to debit the cost of the PPE by 1.5 million euros. Okay, I'll bring this in here, debit, and then we're paying this money out of bank. So we're crediting the bank for 1.5 million euros. So at the point of purchase, at initial recognition, these are the entries you pass. Then at the point of calculating depreciation for the period, firstly, we need to determine what is the monthly depreciation because our useful life was given in months and we've used 9 months. So we need to find out what the monthly depreciation is and what is the total depreciation for 9 months from date of purchase to year end or reporting period. So our monthly depreciation is simply the cost, which is 1.5 million euros, multiplied by the depreciation rate or percentage, which is 25%, multiplied by 25%, then divided by 12 months. So our monthly depreciation amount is 31,250 euros. All right, so for the 9 months period, from the date of purchase to reporting date is the monthly depreciation amount multiplied by 9 months. Okay, so this gives us the depreciation that we'll be charging for the period. So the next thing for us to do is to prepare the property, plant and equipment movement schedule, which is to bring in the cost information and then the accrued DP information. Then we determine the carrying amount as at the reporting date. So for this company, there was no cost brought forward. So our cost brought forward at 1st of January 2022 is new. So I'll put in 0. All right. So we have these additions in the year, which was purchased on the 1st of April 2022 for 1.5 million euros. So that would be my addition. Okay, 1.5 million euros. So the total cost for the period is the brought forward cost plus the additions, which gives us the 1.5 million euros. Then we move down to the accumulated section. So again, we don't have any accumulated brought forward because cost brought forward was 0, so accumulated will also be 0. Then charge for the year will be the depreciation we calculated for the 9 months period. All right, so that will be our depreciation charge for the year of 281,000 euros. Then our total depreciation as at the end of the reporting date is the brought forward plus the charge for the year, which is simply this equals to this amount plus the charge for the year, which also gives us the 281,000 euros. Then the carrying amount as at the reporting date is simply the cost less the accumulated dip, equals to our cost of 1.5 million euros less the accumulated dip. All right, so this is what we have, 1.218750 euros. All right, so let's now move on to what compensation we could get from the insurance company when a loss event happens to our motor vehicles that we've insured. All right, so compensation for insurance recoveries include the loss or impairment of a property, plant, and equipment, and this is recognized in the profit or loss when receivable. The loss or impairment of property, plant, and equipment is recognized in the P&L as an expense when it occurs. All right, so we have an example to help us explain this. So because we've insured our motor vehicle against any loss event, so if a loss event happens, this is what we need to do to account for the loss event. And when we eventually get a recovery from the insurance company, how do we account for it? And when we subsequently buy a new motor vehicle, how do we also account for it and see the accounting entries to pass in these different situations? So in our example here, we have a loss event that has happened to our motor vehicle, which is the motor vehicle got destroyed by fire. All right, and as at the loss date, the carrying amount for these motor vehicle is 1.218750 euros, which is what we determined as at 31st of December 2022, 1.2 million euros, which was we have here as the carrying amount. Then the insurance payout from our insurance company was 1.350 million euros. So this comprises of the 1.2 million for buying a new motor vehicle and 150 euros for the loss of profit. And the actual cost to buy a new vehicle is 1.250 million euros. All right, so this is the condition that's happened, and these are the respective amounts involved. The carrying amount again, 1.2 million. The amount we receive from the insurance company for the loss event has happened, that is the motor vehicle got destroyed by fire, 1.350 million. Then the cost to buy a new vehicle is 1.250 million. So how do we pass accounting entries for this? So at the point where there is the fire incident, so we need to first of all write off the carrying amount of the motor vehicle. So from our information and from the property and equipment movement schedule, we've determined that the carrying amount is 1.218750. All right, so we're going to recognize that amount as a loss in our P&L by debiting the P&L for the loss of the entire carrying amount. All right, then we're going to write off the cost amount of the motor vehicle and the accumulated as well. So for the motor vehicle cost is 1.5 million, so we're going to write it off by taking the cost of 1.5 million. Okay, and the depreciation that we have accumulated also needs to be written off. So accumulated depreciation is 281,000 euros. So I'll come in here and pick 250 euros. So this balance out our journal entries at the point of write-off when the fire incident has occurred. All right, so write this off the books. Then when the insurance proceeds are receivable, all right, you've got in touch with the insurance company, put your claims forward, and you're expecting to receive an insurance claim. So when this amount becomes receivable, you need to go into your books and recognize the receivable from the insurance company. So what we need to do is to debit an insurance receivable for the amount that is due from the insurance company, which is 1.350 million euros, all right, and recognize this amount as income in your profit or loss. Okay, that's the interest to pass. Then when you then eventually buy the new motor vehicle, you need to also pass the interest for the new cost as well. So this time you need to increase the cost of your property, plant and equipment or motor vehicle 1.250. Then you're paying this money out of your bank. All right. So we've come to the end of this video. Thank you for watching and see you in my next video. Bye.